Well, I'm delighted today to be here at the Park Hyatt in Dubai speaking to Dominic Volek from Henley Partners. Welcome, Dominic.
Thanks, David.
So look forward to talking to you today. We're going to focus in on the Henley Partners Crypto Wealth Report 2023. Perhaps you could tell us a little bit about the report, which was just published in September.
Yeah, so generally speaking, over the last 6 to 12 months, we've seen a lot more interest in our sort of core services around residence and citizenship by investment around the world, and particularly from those that are involved in cryptocurrencies. And so we decided to put the report together, which looks at two sort of areas: the numbers behind the crypto wealth around the world, so looking at market value, number of users or investors, and particularly how many crypto millionaires, centimillionaires, and billionaires there are around the world. And then secondly, we developed what we call the Crypto Adoption Index, which analyzes the various investment migration programs around the world according to a number of data points and parameters to identify those countries that offer investment migration that are also particularly interesting for cryptopreneurs, investors, miners, and the sort.
Thank you. And how did you put the data set together? I mean, I imagine a lot of painstaking research went into it.
Yeah, so we're very fortunate to work with New World Wealth, which is a wealth intelligence firm, and them together with interviews and interactions with a lot of academics, but also crypto influencers and investors around the world. We managed to come together with the data set, which ultimately informed the report itself.
Fantastic. And crypto is a new asset class. How did you define the sort of the size of the population that's there? I mean, we're learning about these new ways of investing, and there's a new type of investor owning those assets. So tell us a bit more about the size of that population.
Yeah, so based on the data set and the various exchanges we've had, we've identified that the total market size of cryptocurrencies, the report came out back in September. At that stage, it was worth about 1.2 trillion. Cryptocurrencies in general, about half of that in Bitcoin alone. I think that's probably increased a bit since the recent spike in Bitcoin pricing, but as we know, that can be a bit of a volatile measurement as well. So that's on the market size. We see about 425 million users globally. Again, about 210 of those are primarily in Bitcoin. And then when we look at the actual wealth parameters, there's about 88,200 crypto millionaires around the world. So these are generally high net worth individuals who hold cryptocurrencies worth at least $1 million. So their total wealth might be very different to that, but primarily focused in crypto, about 88,200 millionaires. 40,500 of which, again, are primarily in Bitcoin itself. When we look at centimillionaires, these would be individuals holding at least 100 million in cryptocurrencies alone. There we see about 182 globally. And then when we get to billionaires, which I think is self-explanatory, there's about 22 crypto billionaires around the world.
Did you get a sense of the other asset classes as well that these crypto, particularly the centi and the billionaires, own? Is it highly concentrated in the crypto wealth, or is it diversified into more traditional assets as well?
So those at the centimillionaire and billionaires are typical, founders, that are really focused on crypto. So there it would be the majority. But I think if we look at the mass population, at least from the millionaire perspective, they would be a lot more diversified. Those high net worth individuals are typically, as I'm sure you know, invested in things like other equities and bonds and real estate and a number of other alternative investments, which clearly crypto is becoming a big part of that.
And it's a younger demographic, isn't it, than your traditional private banking client? I mean, what do you think motivates some of these younger clients with this new level of wealth?
Yeah, it certainly is a younger demographic compared to our typical client. Where we look at the typical Henley client, these are usually very successful business owners, entrepreneurs, so they've got a lot of experience behind them, anywhere in the range from 40 to 60 years old, where of course I think it's quite obvious that those in the crypto space are generally a much younger generation. And from an investment migration perspective, their general ethos on life and principle and the way they want to live is much more globalized, independent, and mobile. And so, the world of investment migration, I think, works quite well with those that are looking at crypto as a use.
It is a different lifestyle and mentality, isn't it? It's like in the sense of you'd rent something that you don't need to own, or it's much more flexible. It's breaking the paradigm, isn't it, of traditional wealth, owning bricks and mortar and traditional assets.
Exactly. It's much more mobile.
Yeah.
And not only that, it's also just another level of diversification. So even if we go back to the traditional investor who has, their money sitting in more traditional assets, they are also diversifying more and more into cryptos. And from a residence and citizenship by investment perspective, that is also a very key part of a diversification strategy, right? If you are high net worth and you have the ability to acquire an additional residence or residences and citizenship around the world, that is a level of diversification beyond just what do I invest my money into.
Gives you options.
Exactly.
And obviously we mentioned it's a very volatile asset class. We've been in a crypto winter, if you like, but as you mentioned, Bitcoin price now on a rally. Does the volatility impact the way that the investors, this investment group, this like nearly 100,000 people that you've identified in the group, respond and invest, or they're long crypto? They're the believers. The short-term volatility doesn't impact their behaviors.
I think if you look at the bands that we've analyzed, the millionaires, multi-millionaires, they're in it for the long haul, right? I think they understand it a lot more. These are not sort of people that are jumping on the hype or sort of selling as soon as it goes up a couple of percent, or buying just because they think it's a store of value. So I think generally they're in it for the long haul, and they really understand the blockchain and everything that goes around crypto.
And just moving to the index that you mentioned on the top, perhaps you could talk us through the 6 parameters that you used to compute and rate different jurisdictions.
Yeah. So the crypto adoption index uses 750 different data points, which are really grouped under these 6 key parameters. So the first is public adoption. So we look at that jurisdiction offering this investment migration program. What is the level of public adoption in terms of general awareness, engagement and interest in cryptocurrencies? The second one is infrastructure adoption. So this looks at the local level, the number of digital asset exchanges, integration with banks, even right down to the level of how many crypto ATMs are in that jurisdiction. So really, what infrastructure is available to use?
Because you can settle bills, can't you, in certain jurisdictions with crypto and things like that, that everyday usage in the infrastructure.
Exactly. And then next to that, we have regulatory environment, which of course is more and more important and probably in the news more than anything else around cryptos. The other one is technology and innovation at the local level, of course, economic factors. And then what's critically important to a lot of our clients is tax friendliness, right? So we look at the sort of tax policies in each jurisdiction around taxing profits, but even more so capital gains.
And top of the index came out with Singapore.
Yep.
So how do you characterize Singapore and why it rates so highly across all those metrics?
So we've got quite an interesting tool on the website where you can play with these different parameters, based on what's more important to you than maybe some of the others, and see how the ranking of the countries changes. Singapore itself, of course, from a tax friendliness perspective, ranks very highly. And that's probably what puts it right at the top of the pop amongst some of the other ones. It ranks a little bit less so in terms of infrastructure adoption, as does the UAE, which is sitting in 3rd place. There we see the countries like the US and Canada and Australia ranking a bit higher in terms of digital asset platforms and that type of thing.
And coming in number 2 is Switzerland. So in the Swiss market, obviously the traditional banking sector has obviously dominated and built a huge platform, and now I see a lot of fintech and crypto adoption out of that. I mean, what came out for Switzerland in this index and ranking?
Yeah, so similarly interesting from a tax perspective in terms of capital gains and that type of thing. I think on the regulatory environment, the Swiss regulatory environment is a lot further developed. The other thing is, as you say, the local community. There's a lot more crypto companies there, and more each year.
And the regulatory point there, does that give investors confidence because there's more protection? It's a balance, isn't it, with the regulatory environment?
Exactly, for sure. Protection and security, which of course Swiss and Swiss banking in general is notorious for. So I think those are critical elements to investors, and also stability. So I think a lot of these investors that are looking at different options in terms of jurisdictions, there's always concerns around potential bans on trading or mining or aggressive fiscal policy changes by governments. And I think places like Switzerland and Singapore definitely give a level of comfort in that regard.
But also, I guess, the sense of privacy and discretion are two Swiss traits, aren't they? People can live private lives there. And as we were talking about on the top, what motivates these crypto investors, actually freedom and privacy is one aspect, isn't it? And I think in the Swiss DNA, that's there, isn't it?
Exactly, and which makes it a perfect match.
And then coming in number 3 is UAE, where we're sat today in Dubai. The crypto ecosystem here is going at a pace, isn't
Yes.
it? There's a lot of innovation here. I mean, how do you see it, and how does it tally in your index?
Yeah, so obviously very highly ranking, similar to Singapore, from a tax friendliness. Of course, the UAE is always a very interesting and attractive destination. I think public adoption here is significant. I don't really meet anyone in my network that is not in some way involved in crypto, either as an investor or a miner or in some sort of a Web3 company or cryptopreneur and that type of thing. So again, all of these elements, I think from an infrastructure adoption, probably lacking still somewhat. We don't see a lot of exchanges, and from what I've seen, there's not too many crypto ATMs around either. But certainly these are all areas that the UAE at large is putting a lot of effort into becoming very much the crypto hub.
But just looking at those top 3 with a residency lens, so how would you rank those in terms of being able to actually access then moving to Singapore or Switzerland or UAE?
Yeah, it's a very good question. I would say the UAE by a long stretch would be the easiest in terms of ease of getting in. They've introduced some really interesting initiatives here around their golden visa, where you can make a 2 million dirham investment into real estate. It also targets special talent. So if you're a well-accomplished executive and you earn over 30,000 dirhams a month, you too can apply and receive a 10-year golden visa, which allows you to live here, to invest here, your children to go to school, access to amazing healthcare facilities. So I think the golden visas in the UAE would certainly, put it right at the top. Jurisdictions like Singapore and Switzerland, certainly less so. Singapore, of course, all of these countries, you can always come in through some sort of a skilled visa approach, not particularly our specialty. From an investor visa perspective, Singapore does have their global investor program, where through a very significant investment either into a business, into a number of government-approved venture capital funds, or actually just setting up a single-family office, you can acquire permanent residence in Singapore. But the thresholds are really very high now, probably only targeting that centimillionaire sector. And then in Switzerland, there's no real investment migration program, but within all the cantons, you can negotiate a lump sum taxation. We refer to it as the Swiss residence program. So for those that are not looking to work but are looking to make Switzerland home, you can negotiate a lump sum taxation based on your net wealth and income in order to get residence in the specific canton that you would like to settle in.
And then just coming through the rankings, I mean, Hong Kong at number 4, I mean, how would you contrast Hong Kong and Singapore as centres in this field?
Very similar,
yeah.
Of course. From an investment migration perspective, there is talk of, they've announced that Hong Kong will reintroduce their capital entrance investment scheme. What I've read recently is that will probably be at about 30 million Hong Kong dollars to get residents in Hong Kong.
So they're seeking to attract people now, aren't they, really?
Exactly,
yeah.
Particularly coming out of a difficult COVID period and other, other aspects that made things in Hong Kong a bit more challenging. And now that, like Singapore did and like the UAE does, these are real expat hubs, global investment centers. And so they also look to introduce a number of initiatives now to attract these high net worth, ultra high net worth individuals, not only through capital investment, but also targeting talents and skills through other types of visas.
And there's a lot of technological adoption in there in Hong Kong, isn't there, and financial services. So there's a lot of good ingredients in there in the mix.
Yeah, I mean, it's all perfectly lined up to attract these crypto millionaires for sure.
And then just working down the list, I mean, the US, obviously a key global financial center
Yes.
out of New York and elsewhere. What do you see of the US and how did that rank?
Yeah, so strong economic factors, very high on technology and innovation, also sort of public adoption, infrastructure adoption, they rank very high. Less so on tax friendliness, of course, and that's an area which I think is also constantly evolving. From an investment migration perspective, the US does have the very successful EB-5 visa, which is available to those that are seeking to get a green card in the US. A lot of people still look at it from an education perspective for their children. And so the EB-5 visa is still very popular, particularly out of emerging markets like China, India, and Vietnam, where an $800,000 investment into the US can get you a green card.
And then ahead of the UK, we have Australia. So what are the characteristics of the Australian market for crypto?
Similar to the other major markets like the UK and the US in terms of the rankings. From an investment migration perspective, Australia is a little bit less interesting, at least at the moment, only because the government has gone through an extensive review process of their investor visas. We expect more news out of there early 2024, where more quotas will be available, particularly for their significant investor visa, which requires a $5 million investment and gives you a path to permanent residence and citizenship. We do see a lot of interest in Australia's global talent visa, and this particularly targets people in the crypto space and the broader fintech, agri-tech space, where if you are a very well qualified, industry leading individual, you can get permanent residence without any investment. So that we do quite a bit of into Australia, and particularly for those involved in this sector.
And those looking at on an Asia Pacific time zone, if Hong Kong or Singapore doesn't appeal, I mean Australia there's a lot of positives, isn't there? And there's more space in the country to actually, if you want a different lifestyle or want to buy property and things like that.
Yeah, Australia's
more practical.
Exactly. Australia is a big lifestyle play in terms of transport systems, clean air, things to do, also world-class education and healthcare. Where it doesn't score very well, of course, is on the tax friendliness side again. So there's no perfect country, clearly, as we've gone through the different options, but Australia is certainly one of the higher ranking ones.
And last on the list that we're going to talk to specifically is the UK. I mean, there's a lot of crypto adoption. There's great financial services infrastructure. I mean, what do you see of the UK in these rankings?
Yeah, so similarly, high ranking, again, on the public infrastructure adoption side and economic factors. Similar to Australia and the US, less so on the tax friendliness. On the investment migration side, unfortunately, at the moment, there's no pure investor visa available in the UK. They have their innovator visa that is still available. But what was very popular, at least historically, was their Tier 1 investor visa, which was a 2, 5 or 10 million pound investment to put you on a path to permanent residence. But that was closed at the beginning of last year, under review, and hopefully, we see some interesting announcements from the government soon on that side.
And how do you see the regulatory environment developing globally? I mean, here in the UAE, they've been very much on the front foot with VARA, with other bodies trying to welcome businesses in. When you're looking globally, who do you see kind of leading the pack to try and be welcoming, and those trying to create the right environment for these businesses to flourish?
So certainly the UAE and Singapore, I think, are leading the way there. Hong Kong definitely, joining the discussion. I think those that are much more innovative and proactive in that space will certainly benefit, because as we've seen since the introduction of Bitcoin and other cryptos that have followed, and you can see the numbers now in terms of the wealth that's created and the market value, it will only get bigger. And so those countries that I think are very proactive on the tax, on the fiscal policy side, and particularly on the regulatory environment side, in order to attract not only the investors, but the miners and all the other sort of environment and infrastructure that comes around the crypto world, they will certainly benefit the most.
Because in DIFC, I mean, it's not just the individual, is it, high net worth investor, it's those in the institutional space as well, doing the custody, the fund management. I mean, Dubai seems a welcoming place for all of that, but do you see the institutional environment as well, and people coming into Dubai for that, on that reason?
Yeah, that reason for sure.
Yeah.
And a number of other reasons why we see so many, not only crypto millionaires, but millionaires in general moving to Dubai and making it home, particularly since COVID. I mean, there's been a real spike in that regard. Dubai has a lot more to offer in terms of lifestyle and other factors which generally high net worth individuals value, not to say the least, things like security and feeling safe and being able to also enjoy your wealth. I mean, I was listening to the outgoing Rolls-Royce CEO on an interview this morning, and talking about how you can't walk down the street in Mayfair with a Rolex on your arm because there's a risk. Dubai is a country that celebrates success, and people can really enjoy their money here as well.
Okay, and this is the 2023 report. So how do you think future iterations will grow and change? You'll develop this data set. What's your prediction for the future of this report and how you track this audience?
Certainly based on the last few weeks, the numbers will only grow.
Yeah.
I guess it depends. It is a volatile space, right? So it'll be interesting to watch how it tracks, but it'll be something we do on a much more regular basis now. This was the inaugural crypto wealth report that we put out. So I'm pretty confident that we'll see a lot more growth in terms of those that are making their fortune through cryptocurrencies. We'll see more cryptocurrencies coming to the market, greater adoption at the local level from a public perspective, from an infrastructure perspective of cryptocurrencies in general. I also think we'll see a lot more investment migration programs coming to the fore as more and more countries look to develop these. And so there'll be probably a deeper analysis and more options available when we look at this again next year.
And those who are interested in reading the report in full can download on your website and read at their leisure?
Yeah, everything's there. They can access the index itself, and as I said, they can play around with the parameters to identify which country meets their requirement the most. And then, of course, usually they will have some form of residence or citizenship by investment program that they could partake in to actually go and spend time in that country.
Fantastic. Well, look, Dominic, great to talk to you today, and we look forward to sharing this interview.
Thanks, David.